Moving over to the retail space, Clicks' growth is not slowing down. During the annual period, the group delivered a 14.3% jump in diluted headline earnings per share. This was supported by larger profit margins, upbeat cash flows, and a stronger showing from its retail, health, and beauty categories. And joining me to discuss this performance in greater detail is company CEO Bertina Engelbrecht. Thank you so much for your time, Bertina. Now, the period under review was really filled with ebbs and flows in the operating environment. Would you say that, filtering through to your performance, maybe there was a varied performance or varied growth within the financial, the financial year, or maybe there was consistent growth throughout?
I would have said consistent growth throughout in respect of the retail business in particular. We had a really great first half performance in retail, and that carried through in the second half. We always talk about the first half in retail, which is about the peak trading period, and we know how to capture that. It's the click season, not the Christmas season any longer. And then, of course, in the second part of the year, it's flu and colds. And we are very well positioned to capture that. So we've got two opportunities to capture sales. The UPD business was a story of two halves. So in the first half, we had just gone live with our implementation of our system in our largest DC. And that was stabilized by the end of Q1. But of course, it continued to impact the wholesale performance. In half two, all of the additional investments that had been made in people, in order for us to maintain service levels, we were able to extract in half two. And so you see exceptionally good cost control in terms of employment cost growth, in terms of shrinkage containment in the UPD business in the second half, and really operational metrics that are back at what we call 98 to 99% on time and in full, something that we measure every single day, twice a day in that particular business. And so we were tough on that business. The teams in that business in the prior year, they didn't earn any bonuses. And my instruction, and I use that word very, very seldom in our organization, was that executives, I hold you responsible for ensuring that our people get bonuses. And so I'm super proud of the fact that we were able to deliver on that for all of our employees. And in fact, if you look, total bonus payments to employees up 21% in this financial year. We paid back to the people who delivered the result for us.
So would you say, for example, with UPD particularly, with the two halves that we saw, would you say that it is now on a solid footing of consistent growth going forward?
Can most certainly see that in the second half of the year. If I just look at Clicks, is UPD's largest wholesale customer. Clicks accounts for just over 56% of UPD's turnover. Full year, Clicks growth 6.8%, but in the second half of the year, 8.5%. And that was on the back of really improved operational performance and stability within the UPD team. And I've seen the same in terms of the hospitals as well, the private hospitals.
Let's talk about margins, Bertina. What levels of margin expansion are you seeing here, particularly with the price sensitivity of consumers right now?
Well, internationally, the guys are always very surprised, but because for many years we were not able to open a single pharmacy, when Jack Golden first started this business nearly 60 years ago, we have always needed to compete with the grocers, which is what you don't find in drugstore models anywhere else in the world. They charge a premium. We've never charged a premium. So when you look at the price index on a volume-weighted price index, we are cheaper than every single major retailer in this country. And when we look at that index, we exclude our 3 for 2 promotions, we exclude our bulk offers, and we exclude the benefit of club card benefit, the club card benefit. And think about this for a moment. Total cashback that we paid through to our customers in this year was 780 million rand. That's 750 million rand. That's quite a bit.
And I must tell you, nothing makes me happier than the cashback, as I've told you before, but also those 3-to-1 specials. I really love those. Well, just still on expansion, talking about your expansion program now in terms of your stores. I do understand that there was a glitch in the pharmacy openings. Just shed some light on that and where you are now with that expansion journey.
Well, it was a matter that had dragged on through the courts for the better part of 6 years. And ultimately, there was a decision that said, we couldn't hold a manufacturer's license. And whilst that matter was not resolved, the Department of Health, rightly in terms of the court case, said that they couldn't issue new licenses. We didn't take the view that said, how do you attack government or a government department? We took the point of view that said, how do we now work with government to collaboratively resolve this matter? And, it took a bit of time, but we stayed the course. And so I'm very, very pleased to say that we resolved the matter. Everything was finally signed off on the 1st of August of this year. And super pleased as well that the department have already issued some of the pharmacy licenses to us. And so that just says, we are on a very good wicket for the next couple of years that lie ahead.
Yeah. Well, Bertina, we do know one of the headwinds that we do have in the country is logistics crisis as well. And I mean, considering the fact that you're taking market share, it means that there's a lot of consumer demand. So how are you managing logistics and inventory on that front to meet that demand?
Well, you'll see, for example, we hold the finance teams accountable for working capital management, and which is why you see we've had very structured improvements in our working capital management. But we always make the point, don't sacrifice inventory in order to hit the number. And so, for example, we carried additional stock now going into our year end because we wanted to make sure that we didn't have adverse implications due to shipping delays. So that's one of the things that we have done. Secondly, of course, we invested about a few years ago in the JDA system, or it's now called the Beyonder, and that's really about improving our forecasting capability. So that's also very good. And what that has done already in the year, it has significantly reduced our lost sales due to a lack of availability of stock in store. There will always still be areas that we need to improve upon, but I feel that we are well set up now in terms of the investments in technology and in people capability that we've made to get over any of those sorts of humps. But Christmas essentially is locked and loaded. I've seen the ad campaigns. It's going to be a click season again. And so, there's much to look forward to in the new financial year. I may perhaps also just add, in order for us to control our own destiny, we have got centralized distribution. So our UPD business does all of the distribution of pharmaceuticals through to Clicks and their pharmacies. And Clicks, of course, also does its own front shop distribution through its own centralized DCs. And that probably is one of the reasons we have been so successful in terms of our in-store availability.
Well, Bertina, looking forward to Click season. Thank you very much for your time and for your insights there on the numbers that came out from Clicks earlier on today. That was the CEO of Clicks, Bertina Engelbrecht.